One. Hey everybody, Glenn Hausman here of the No Vacancy News Network, and I with Mr. Chris Green, Chief Commercial Officer of Chesapeake Hospitality. Chris, really interesting scenario that we're going on right now. I was just at the Hunter Hotels Investment Conference last week, or a couple of weeks ago as we're recording this, and I got to tell you, Chris, I was a little shocked because we were having month after month of seemingly records, but people seem depressed. It's like almost like they expect the end of the world to be coming, but it's not, and they're almost disappointed that things are continuing to go so well. How do you read the psychological state of the hospitality industry investor these days?
Yeah, it's an interesting thing. It's a really interesting concept, Glenn. I think that, well, the best way to put it is we've experienced such a big run-up that starting to see a little bit of flatness in RevPAR is concerning people. But more than that, over the past 7 years, as business has been booming, so has the business of all our suppliers, all of our competitors, and the markets have gone crazy. So wage pressure, benefit pressure, the new economy for employees is all creating this bottom pressure. And now that we've only got 1% to 2% growth, it's really a struggle to get year-over-year GOP gains. Which, listen, the people that you see at the conferences, they've got great companies, they care about their associates, they want to do the right thing, but ultimately they're run on the net income of their business. And that net income is getting squeezed hard. So while we're at all-time highs, I think we might be looking at a new norm of stabilization of operating profit percents.
That's really interesting that even though we are at such highs, that might not be enough to make people feel really positive about themselves. In fact, the words that I hear is cautious optimism right now. Is that kind of how you're seeing this sussing out?
I mean, that's what we're saying in the business, but I think what we need to be doing is attacking that. If this is the way it's going to be, if we're going to be seeing this pressure coming from the bottom to the top, then we're going to have to be thoughtful about how we do that. And the biggest thing that I don't see changing is the cost of retention and training and acquisition and the care for our associates, because they drive our business. And that's growing ever more expensive. So I just don't see that changing. That's why I say margins may be suppressed for quite some time, because the same thing is true for our competitors, right? If they sell you sheets, if they sell you linens, if they sell you chemicals, they're having to pay more for their people. So it's just driving up everything. And rate at 2% growth is not going to keep up.
Excellent. So I want to open it up to all of you out there. How are you seeing the current state of the market? Are you finding yourselves being pressed on expenses rising and the inability to keep pushing rates to match up with this? Or maybe you're having some other scenario. Perhaps you realize that you need to move along with culture and create new opportunities out there that better blend with the way that people want to work, live, and experience the hospitality market. So drop us a line, give us your comments in the things below, and you can find Chris Green at ChesapeakeHospitality.com, and you can find me at NoVacancyNews.com, and we'll be back with another short take very shortly. Thanks for watching.